What is an S corporation and can it save you on taxes? My name is Jim Martin, CPA, and that's what I'm going to talk about in this video today. An S corporation is just simply a tax form with the IRS. As a business, you have four possible tax forms that you can file your taxes with. Most people, when they start out a business as a real estate agent, you are a sole proprietor and you're filing Schedule C on your personal 1040. The other option you could pursue is the S corporation. And what is the difference? Well, the biggest difference really lies in self-employment taxes. And what is self-employment taxes? Well, self-employment taxes is your Social Security, Medicare. These taxes are, if you're a W-2 wage earner, they automatically take those out of each paycheck. When you're self-employed, that doesn't happen. You're responsible for paying it in, and they call it the self-employment tax. So when you're filing as a sole proprietor, that's Schedule C. All your income, in addition to paying your regular income tax on whatever you earn, your net business income, you also then pay an additional, it's about 15% of self-employment tax on your profit of your real estate agent business. Now that's your commission income less all your expenses, and that's how you come up with your business income. And so that's taxed essentially twice, your regular income tax and your self-employment tax. You add it up, and that's how much, and or they factor into, I should say, how much tax you have to pay each year. Now, the S corporation helps to reduce the amount of self-employment taxes you pay. And how you do that is, well, let's talk about how you can make that change to being an S corporation. You need a business entity, and typically that's going to be your LLC. You cannot elect to be an S corporation or use the S corporation tax form unless you have a business entity. So step one is to get an actual LLC in place for your business. Now, some states and some agents get pushback because they say their broker can't pay them in an LLC, and that's okay. There are workarounds that. Don't let that prevent you from setting up an LLC. If your broker can pay the LLC, great. If they can't pay the LLC, talk to a good tax preparer. They can work around that. Once you have that LLC, there's an actual, just simply a form you file that will elect to then be taxed as an S corporation. Creating that LLC doesn't change. You would still be taxed as a Schedule C unless you make this election. Once you make the election, you can be taxed as an S corporation. And so now, why would we want to do this? How does that save on the self-employment tax? Well, the profit and loss from your business, when it's under or filed using this S corporation tax form, the profit is not subject to that additional self-employment tax. So you're going to save about, as I said, 15% on the net profit. However, that net profit's not going to be the same, because what you're going to do is you're going to actually pay yourself a wage. It's one of the requirements of a S corporation. You need to pay yourself what they call a reasonable wage, and you're going to issue yourself a W-2 from your business. Now, that W-2, as I alluded to earlier, you're going to have those same taxes, the self-employment tax, we call it FICA on the payroll, but it's the same Social Security, Medicare. It's still the same 15%. Your business is going to pay half of it. You're going to pay half of it. Don't worry about the mechanics. Just know you're paying 15% one way or the other, since you're the owner and the employee in this case. So it's all coming out of your pocket at the end of the day. And so you're going to pay yourself a reasonable wage. And that's going to, you're still going to pay that self-employment tax or those FICA taxes. But what's remaining after you pay that, because that becomes an expense to your business. So the same income and all those expenses, now we're adding that wage and some of those taxes as an additional expense. So you are going to have a smaller amount, but whatever that number ends up being, you get to save on that self-employment tax. So put a few numbers to it. Let's just say net profit of your business on the Schedule C was $100,000. Make a nice, simple, round number. $100,000, make it, say it's 15% exactly, you're going to pay $15,000 in self-employment tax. Now, we go over to the S corporation, same profit and loss, but let's do $40,000 of salary to yourself. So you're going to pay $40,000 times 15%. So that's what, $6,000 in self-employment tax in that case. The remaining, and so $40,000, that's going to be your deduction. So now the profit through the S corporation is going to show $60,000. And that $60,000, you will not pay that self-employment tax. So so what, that's $9,000 if I'm doing my math right. That would be your tax saving in that scenario. I'm not saying those are a good salary. I'm not saying anything. That's just an example. Talk to your own tax professional about what you think a reasonable salary for your situation would be. But that puts numbers on there. That's the tax savings. What are the disadvantages though? Because with anything, you're going to have advantages. There are going to be some disadvantages. The biggest one is you're going to have a separate tax return. So it files its own tax return separate from your personal tax return. You're still, of course, going to have to file that personal return, but the business now is an additional tax return, which will require additional costs by a tax preparer or whoever is helping you prepare that tax return. There's an additional cost there. Also with the payroll, you need to run payroll. So it's going to take time, administration, and more than likely, I would always advise hiring somebody to do that payroll for you to make sure you're in compliance with all the requirements for not only federal payroll, but your state might have some certain requirements you would need to follow as well. The third one is also, I say that most people don't see this really as a big disadvantage, but one of those taxes that you're paying in is Social Security. And as the system works now, who knows what it will look like at the time you actually retire, but the system is based on how much you're putting into the system will determine how much you would get at retirement. So by putting in less into the Social Security system, it stands to reason you would then be eligible for less benefits in the future. Most people, like I said, don't find that as a disadvantage. They'd rather have the money now, even if you put it in your own retirement account and do it that way, they feel like they're better off. But I do want to say it is a disadvantage, and I've had people in the past that say, no, I want to fully fund my Social Security, and they don't want to do the S corporation because they like paying into the Social Security. Each their own. The other thing you really need to look at is you want to make sure your bookkeeping is at a good level. It's a little bit more of a requirement when you're an S corporation as opposed to Schedule C. The reason being is the tax form is a little more complex when you're talking about an S corporation versus the Schedule C. There's a balance sheet component. There is different things, distributions that you take out, money you take out of the business, get reported on the S corporation tax return, as where it doesn't really matter on the Schedule C. So it's really important to have that separate bank account, really have good bookkeeping up, which again may have additional charges of additional software or paying somebody to help with the bookkeeping. But that's the high overview. It is a good option. You want to have some good income though and those tax savings because there are those additional costs. And not everybody would get the tax savings that would make it financially worth paying those extra fees and the extra administration costs of being the S corporation. But that's the S corporation in an overview, how it can save you taxes. If you've found this useful and you've stayed this far, I'd appreciate a like. And if you want more content like this, go ahead and subscribe.